Well, hello there, traders and investors. I'm LA Little. This is your daily NeoTA wrap. We're talking about the markets. We're talking about neoclassical approach to the market, supply and demand on the charts. We're using the information the market gives us. We're not projecting, blindly based on some pattern, something like that. We're letting supply and demand, as you see it on the charts, give you information. That's what the testing process is. That's price discovery. That's how you learn who's in control, who isn't. That's neoclassical, folks, and that's what we try to do here. I do the show 4 times a week, Monday through Thursday. It's broadcast at 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. And if you want to subscribe to it, you just reach up in the right-hand corner on YouTube, hit the subscribe button. Anytime I push public content, you get a notification. As far as these markets, what did they do? Well, it was a day of up until it wasn't. We ended down 0.05%. So basically flat. Now, I'm doing this show very early. It's like an hour after the close. I'll be out this evening. So doing a quick show here before I leave. But if you've been paying attention to what I've been saying, I've said that this is going to be the spot that's going to be tough to get over. And it, of course, is proving to be a tough spot, and it should, right? Because you're looking at this bar, the low of the high, and you're looking at the high of the breakdown bar. If you look at those two price points, you got 24.59, roughly 24.60 there. You go over here, it's 24.65. Yesterday, you get it up to 24.68. You close it at 65. Today, you get it up to 68. You close it at 64. What's it doing? It's having trouble at this price point. What did it also do? Did over-unders almost everywhere you look today. You get over, you get back under, you do it at a price zone that you think should fail, right? I'm suspecting it's going to fail. What does that mean? Back down the other way if I'm right. Going to bring it right back down the other way. That's the NASDAQ. If you look at the other markets, and let's look at these together. I've not went through them all yet. The NASDAQ, same thing. Over, under, back into this other bar. That looks like the same scenario to me. Let's look at the NDX. And the one that we really want to focus on is the Russell. Now, I don't have the ending volume, so let's take a quick look at the ETFs and see if they give us an ideal. I think volume is going to be lighter today. It looks like it there on that one. Let's look at the IWM volume. Also looks lighter. And finally, let's look at the SPY volume. Where's the SPY? There it is. And let's see what that one looks like. Yeah, so it looks like lower volume everywhere. Okay, so given that, looks to me like what's happening here is those over-unders, right, going to try to send it back the other way. You got an over-under also on the Russell. And overall, this looks the same across the board on all these. So I expect tomorrow you're going to see some pressure to the downside, or certainly an attempt. Now, let's go back to the S&P, because I concentrate on the S&P because I think the S&P is the best read in terms of large cap stocks. The Russell small caps, the Russell is a lot more reflective of what's happening with the local economy than the S&P is. And the reason I reflect on this a lot is because this one, I think, is where you want to focus. This is what everybody tags their performance to, the S&P 500. And it also is a good proxy of the overall market. The Dow's pretty thin. NDX can be skewed sometimes. NASDAQ composite, S&P composite, those are the best two in terms of broad large caps. Here's the S&P. This is what it will look like if it breaks to the downside. If it does that, let's get the numbers on this. That would be, and we can estimate, that's 24.90. We got the high over here, roughly 24.70. That's about a 20-point difference. If we go to the bottom, 20 points under that's 24.17, which is about where I drew it to. So that would bring you right down in these swing point lows. Now, on these swing point lows, the ones that haven't been broken are these. Let's circle them right quick. We got this one, we got that one, and we got another one over here. Okay, this one right here. So if we look at those, right, and look at the price points on those, we got 24.13 roughly, 24.05 and 24.03. If you take those three together, and if we bring over the S&P weekly, 2405 is right there. Okay, so now 2417 is what we just said on this ABCD down. Let's assume it does that. Let's assume that today is the top, right? You bring it down to 2417. What does that do? Potentially sets up another ABCD. This then would be the resistance that takes you down, breaks these, and not only does it, well, not that one, but this one here, not only does it break those three, but if you bring over the weekly, you'd be breaking a weekly as well. Now, counterposed to that is the fact that you haven't been under this swing point high, or you haven't tested it more than 6 bars. So what should happen is you should get a bounce. So when you know all of that, then what do you say to yourself? Oh, well, what if it happens this way? Let's assume that we get the downtrend. So if we get the spike down, right, let's say it goes to here, or supposed to, well, what if it just extends? Odds of breaking this are not great. Well, it could break it, but the odds of breaking this swing point high without a bounce, this one here on the weekly, is not great at all. Matter of fact, the odds favor that as a buy. And if that's the case, right, what if you just slam into that, buyers come in and grab it, and you push it right back up again? That to me looks like the most likely scenario when I'm just looking at the indexes themselves. If I look at the sectors today, I suspect they're going to show over-unders as well. And I'm seeing some deterioration internally in the market as well. And we've got extended MTTFs, which we've talked about ad nauseum. You can see it here on the weeklies and the monthlies. When I put it all together, right, and I think about how this market's trading and the way the feel of the market, even though I'm not watching this as close while I'm on vacation, my sense is you're going to see it spike down in this area. You're probably going to see it bought. And if you're a classical guy, right, and these classical guys, they love the head and shoulders. Well, this would kind of be a shoulder, a shoulder. This would end up being your neckline, right, through here, right? You trade down into this area, and then you get one more bounce, and then what happens? You break your head and shoulders. That longer term could be what's setting up if you want to mix in some of the classical stuff. Of course, on the neoclassical, we don't really care about that. We just look at levels, right? We're interested in horizontal lines, not vertical, not slanted, horizontal, right? Because that's supply and demand. If you break under this big red bar we see here, if I can get the line in there pretty straight, about there. If we break under this big bar, right, we're trading inside of it right now. And if we break under it, get an ABCD down, we come into this swing point high. That should be the buy, the bounce, and then potentially the next leg to the downside if it turns out that way. And if you do that, especially if you don't break this on that test, then you set up some ABCD structures to the downside. Could actually take you a little bit lower. That's a longer term picture through August, September time frame. We'll see if it works out that way. It's all projection at this point, or conjecture, I should say. We don't know how it's going to play out. That's why we don't try to make all those predictions. What we really care about is what's happening now. What's happening now is over-unders. Look for this thing to see some pressure tomorrow, and we'll find out if the sellers really do have an upper hand finally after about, 10 months of up. Have a great one, folks. See you next time.